We are here, we are here, we are here on this amazing day. Okay, everyone, this is Cam Jones FX Daily Analysis. Disclaimer, I am not a professional. Please watch these videos at your own risk. These videos are for entertainment purposes only. Thank you. Friends and family on Discord and Telegram. Families and friends will prosper. Let's get back up to business. Okay, guys, the pair we'll be checking out today is EUR GBP. Let's grab our red bush. Let's see what's going on in the market. So back in May of '93, the market started off. It went straight down into W pattern formation. So when we see W patterns, we see a push up. Here go the first leg of the W into the support. Second leg coming out. Third leg back to the support. Fourth leg pushes up. W formation completed. Here comes a retest. After the retest, you should be looking for a push up. Push up happens. Breakthrough previous areas of resistance. Created new areas of higher highs. Wasn't able to break. I could see a few touches in there. Market came right back down to go back up to retest previous areas of resistance. So it's something in here where the market is retesting. Wasn't able to break through to make it here, so it just dropped straight back down. Very bearish here. Once the market got here, we can see it created new areas of support. I think there's a pattern too. This is a pattern. I'm getting it right. It's called the teacup or something like that. It's supposed to be like just the bowl of the teacup, and this will be like the handle. And if you look at it, it's basically a formation of a W with the push up. Retest happened here. Pushed up again. Wasn't able to hold. Market came back down. Resistance area. Came back to retest something here in previous time. To break down further, created new areas of support. This area right here is where the market's the lowest the market has ever been in the pair EUR GBP. The market bounced up and down the support, back and forth, had a breakthrough, went through previous areas of resistance. Bouncing here. Buy, sell, buy, sell. Market finally broke out resistance, created new areas of higher highs. Something happened in this area, a little cluster. Market pushed up again. Market probably just danced around in here, pushed up. Highest highs that the market has ever been. Market pushed back down, retest previous areas of resistance, so something in here is retesting. Came back down, broke areas of support, bouncing up and down on between the support line, in and out. Finally breaks out the support, went back to lows, the market's trying to return to previous lows in this area. We see a formation pattern. That's a W. First leg of the W is right here. Second leg of the W. Third leg. And the market pushed up. Retest came. Market pushed up again. Created new areas of resistance. Had an area of support. Market bouncing up and down. Last candle on here is where price action is. So we got to figure out the right price action. Is it going to head to this red line I just created momentarily, or is it going to head back up to this red line for the resistance? That's market structure. So Forex 101 will be number one, market structure. What we just did. So we just identified what's going on in the market. The market's currently right here in this area of this consolidation. So the market is bouncing up and down. So we do know what the market is doing. We just got to figure out what direction it's going to go into right now. Or is it continuing going down? Or is it slowing down to go back up? Is it forming a pattern or not? We got to check out this area to see what's going on. So we do know market structure already. Number two, we'll be identifying the overall trend. Number 3 will be identifying SR lines in the market. Number 4 we'll be looking to identify patterns for entry in the market. So we did number 1. We're going to head down to number 2. Let's figure out our trend line for our overall direction. Okay, so we have the screen all clear. We're going to head over this area of price action. We have to figure out what directions the market's going into. We do know the market is consolidating, so it's buying. We can buy and sell in this range here. So for right now, let's say we say the market is in an uptrend. So let's say the market is in the uptrend. It's trying to come down, bounce off of here, and then go back up. It may not be. There's a chance that it may be doing the opposite end. We may see it down. So let's grab our trend. Let's bring it down here. Change that to red so we can know the market come back up. If it does come back down, it can ride out resistance. If not, it's respect our support line and bounce up and down, go up on our trend line, I mean. So if we go down to the weekly, or let's say on the monthly, look for price action. So once we find out price action, look for the areas of highest highs. So if the market's trying to come back to high highs. If it goes back, the market's trying to reach lower lows. If we had to grab peaks in between, there's a peak right here. You can grab this inverted peak. It's close to price action. So if something happened here, you can identify here and here and here and here. So as the candles are respecting and it's touching when it's touching the wicks, is looking clean, it's touching the support lines, we can tell, okay, you know what, this is an area. So I know something's going on in here, and if we read the candles, we can see that the candles is losing momentum. So it went from large to medium to large to extra small. So when you see the extra small, like it's probably running out of momentum to shoot up. So you can tell something's going on in here. So what we can do is we can go out on a time frame, and we're going to tighten up our SR lines some more. So we'll look for price action. This price action candle here. We can grab our SR lines. So like I said before in previous videos, I like to start my way top down into the blue SR lines, and what I'm going to do is just add inverted and I'm going to add peaks and inverted peaks from the top down and work my way up from the bottom up. So this is the area of a peak. I'm also going to change the color so we can identify the time frame the SR line was done on. So we have a peak here, there's a peak here, we have a peak here, we have a peak here, and if I go bottom up, inverted peaks here, inverted peaks here, inverted peaks here. So we can see how the SR lines are touching the candles. It looks clean. So number 4 we're going to do is we're going to look for a pattern to see if we can see what's going on. So we can see that this time around, like, I can see the overall direction the market is going to. That was just a trade. This is a trade I see that some people may not know what direction it's going to. So instead of getting confused and say, hey, is it an uptrend, is it a downtrend, I put a green line going up, a green line going down. So if it breaks here, if we can see that the momentum slowing down and we have that turnaround happen, then we'll take it up. If we feel like, you know, the market, if it does happen and we come back up, it may not go up to the blue line. It can, you know, slowly touch our trend line and come right back down. So it can do like a wedge. It can do like a bounce off. It can do one of these, bounce, bounce, bounce. Just bounce in and out until it fully breaks out, up or down. So if we had to look for patterns for entry, we can see that the market is in the bearish, so it's going down. We can zoom in to take a closer look at the last candle to see what's going on. So the second to last candle is a doji. Doji mean the market is indecisive, so it may turn around. And then right after the doji, you see a red candle. So the market may be doing what I just said it's probably going to do, is come down to here, lose momentum, and just turn back around and go back up. If we go down the time frame to look for a pattern, we can see if we can find entry with that pattern now or maybe not. So I see the pattern forming. You guys may see it now on the daily. I'm going to put it into a rectangle so you guys can possibly see. So if this is price action and I grab the highest high, it's the lowest low, and I grab this whole area, sometimes if you highlight it, I feel like if you highlight certain areas when you're marking up, you can identify things a little clearer. So if you can see the letter that's forming in here, this is the trade I was talking about. So what's forming is a W. So as there's W forming, all we have to do is going to finish drawing it out for you guys. This is the first leg of the W. This is the second leg of the W. This is the third leg of the W. And we'll get that fourth push up. So the fourth leg can go from here to here and retest and push all the way up. Or it can go from here to here and then retest and then push all the way up. But it's going to happen. I shouldn't say it's going to happen. It can do one of these, push up and just drop straight back down. But we do know that it's about to do that W formation. So after that, it creates that last leg of that W, that fourth leg of that W that come down. All you have to do is just wait to see, okay, is it going to go up or is it going to go down? Once the W formed, so once, let me go back. Let me clear the screen just a little bit. For example, once the W's formed, so you got the first leg, second leg, third leg, and we have the fourth leg that pushes up here. Most of the time, once it pushed up a certain point, definitely like it passed like this level here, and the retest happened right here, most likely it's going to push up and go. Not saying that once you get to this level it can go back down, but after a certain level of, if it break higher highs, most of the time it just shoots back up. So somewhere in this area is going to retest. It could be here, but it's going to retest and it's going to go further up. If not, you'll catch it at the retest if you see the turnaround. So let's clear the screen. We're going to go down the time frame. We're going to stay on the time frame. We're just going to clear the screen. To see if we can take a look and see if we see anything else. Yeah, so from here we can see there's a wick, there's a long wick here, there's a long wick here, so it's getting wicky. So the market, this is supposed to be some type of consolidation area. So once the market comes down into the consolidation area, it's going to bounce, bounce, bounce. You know, sometimes it makes W's, it does a retest and it goes. Sometimes it could be a triple bottom. It could be 3 bottoms, 1, 2, 3, and then it can finally go. But something's going to happen here. So no matter what, if you don't know the Forex pattern cheat sheets on Google, and go to images, go to Google, type in Forex pattern cheat sheets, and just look at the patterns. Learn the patterns. If you don't learn the words to the patterns, it's fine. It's a lot of patterns at the same time. You don't have to identify all of them, but at least go over it when you can, or throughout the day or the weeks, so you can have an idea. Okay, when you get in the market, you can see different patterns, so it helps you out with entry and exits. So right here, this is an amazing trade. If we do find entry and it looks like it's going to go up, so what I would do is, if I see the move happen, or I would see the pattern, so I will be looking for some type of engulfing pattern to happen with some dojis around it. So if something happened here, I'll take entry, and let's say it's a W, and let's say I find entry here at the SR line, I would take it to the next level. Take it right here to this line. That will give me a total of 71 pips, which is an amazing move. If it goes back for the low, tighten it up on the lower time frame. Estimate about 33 pips. You could tighten it up a little more. I'm cool with 33 pips on the way down. On the way up, 71. Risk and reward ratio would be 2.15. It's a good trade for me. That's a trade I would take, and you guys can take as well. Okay, everyone. This is Cam Jones, FX Daily Analysis. Thank you for watching, and thank you for your attention.